wanted to take a little bit of time to talk about something that many of our clients ask us about, especially the younger ones, and that's crypto and specifically Bitcoin. And showing here a picture yesterday, we had the opportunity to listen to Michael Saylor, who's the CEO of MicroStrategy and one of the, I think, most ardent and vocal bulls on Bitcoin, talk about how he sees the asset in the future. He gave a short presentation to Microsoft's board about the strategy he thinks they should be using with Bitcoin. And so we wanted to share some of our kind of very high level takeaways from that day.
Yeah, it was really fascinating. We were at a technology conference with a venture firm called Lasagna that put it together. And there were a ton of founders who'd already had a very significant exit in tech there. And so not only did we get to hear him, but we got to hear their perspective on Bitcoin. And what's really interesting to hear is that, I'll be talking to a founder who's really, we're talking about a super high IQ, really well-educated individual, and they have $100 million to invest. And they're like, why do I need a family office? I could just put it all in Bitcoin. So there's really a generational pull towards Bitcoin amongst younger people. If you're under 40 years old and you're in tech, you like Bitcoin and you own Bitcoin and you consider it to be an asset class like the older generation considers investing in stocks.
So we can get into a lot of technical aspects of Bitcoin, but we think actually, the bull case that we see it rests really on two major things, and the risk we see is one major thing, to really simplify it. And in the short, medium, maybe longer term, supply and demand is what's going to drive the price. And there are really two things that we think are structurally going to drive up demand. And that is, if you are extremely wealthy and you are not in the US and you're not in parts of Europe or let's say Canada, if you have $100 million, as Michael Saylor said, where do you put it that's safe? And the answer is there's really not many options. And Bitcoin is really the best. And so as that wealth increases in those parts of the world, the demand for Bitcoin is going to increase. And then the second piece is, as Pat just mentioned, younger people, they believe in Bitcoin, they trust Bitcoin, and they trust it much more than many other assets. And if you look at where is the wealth today, if we look at our client base, it would be older folks, a very small percentage of their portfolios in Bitcoin. If we look at the younger folks, they're comfortable having a huge portion of their portfolio in Bitcoin. And so as that wealth transfer continues to happen, more wealth is created by younger folks, they inherit that wealth, it's reasonable to expect that more and more of their portfolio goes into Bitcoin. And so we think those two factors are just going to put a large upward pressure on demand. And then there's one major risk, and Pat, maybe you can address that.
Yeah, I think if you watched a video that we did with the venture capital firm Playground, the technologist, the VC who was speaking, is an expert on quantum computing. And we've invested in quantum computing with our client base through PsiQuantum. And quantum computing is going to be the most incredible compute power we've ever seen. And it's going to be able to do all kinds of incredible things. We're going to solve problems that we didn't know we had. And that's the risk. The risk is that quantum computing can break the encryption and essentially hack Bitcoin. And up until now, one of the reasons why Bitcoin is the far and away leader and really the only digital asset we think people should pay attention to is because no one has been able to hack it. And believe me, everybody's tried. That's really the case for Bitcoin versus all of the other cryptocurrencies that are out there. And so that's the big risk. So, Bitcoin remains, it's speculative. I mean, it's absolutely speculative by conventional standards. How I think we think investors who want to invest in Bitcoin should approach it is we think the simplest thing you can do is buy IBIT. You want to talk just for a second about IBIT?
Yeah, I think historically it had been much harder. You had to have a cold wallet. You had to have then Coinbase, which isn't that hard, but it was still another platform. And now you can buy ETFs on Fidelity's platform. IBIT is 12 basis points of expense ratio. It's liquid. Yes, it doesn't have the benefit of being able to trade it 24 hours a day. But again, from our standpoint, that's not why we're making these investments anyway. And so now you can buy Bitcoin, you can buy Ether, you'll be able to buy other crypto assets on Fidelity. And we think that's a safe, very easy platform to do so.
And I would just say a couple of comments that Michael Saylor made, and he was really fun to talk to, by the way. He was fascinating, and we'd be happy to share more with you about that. But he really thinks you should only buy Bitcoin, and he thinks you should buy and hold it. I mean, it's just very simple. It's not a tradable asset. He views it as an asset to hold, like you would hold a piece of real estate or you would hold the S&P 500. He views gold as an analog piece of capital, and then Bitcoin is digital. You can argue terms and so forth, but our conclusion is really simple. Younger people are going to increasingly have a larger share of wealth, and they're going to buy Bitcoin. Foreigners, especially people who live in emerging markets, are going to buy Bitcoin. And the big risk to Bitcoin is that someone can hack it, and quantum computing would be that big risk, and that technology is now emerging. So that's what we think about Bitcoin.
So thanks again for listening, and please reach out with questions or comments.
Thank you.